If the United States defaulted on its debt, that makes all of our obligations, our financial obligations around the world, suspect. And right now, the U.S. dollar that's the reserve currency. That's what everyone wants. That's what they know you can depend on. You have a bond. We know that the United States stands behind its currency. The United States stands behind its debt obligations. We default on that debt, and it just throws it all into chaos.
So will Congress take action before it's too late, and how does the market stand to be impacted if they don't? Joining me now to discuss is Michelle Snyder, Partner and Director of Trading Research and Education for the Market Gauge Group. Now, Michelle, we all know that this fight between Democrats and Republicans is nothing new, but what is the risk if the U.S. does default on its debt, and how does that impact the country on the global stage?
Well, the clips you just played, Rachel, really shows the polarity of the political parties. But there's two issues here. There's paying for the debt that we've already incurred, and then there's the new debt. And that's really where the negotiation might come in. So at this point right now, I would say that the risk of default is still relatively low. And with this negotiation, it really will be a matter of the consensus for actually paying off the bills that we've incurred, and then what the Democrats want, which is to raise the debt ceiling even further so that they can include their new government spending. And that's really the rub right here from the political standpoint. So the government could be closed for quite some time before we go into default, unless, of course, during that time we have another disaster, whether it be a natural disaster or a pandemic crisis, possibly major spillover from Evergrande, as unlikely as that may seem. So really we have to kind of keep in mind that we can run closed or partially closed for months until such time we wind up getting actually a downgrade or totally defaulting. And so we're hoping in that time, of course, they come to some consensus. What happens if we default? Well, obviously, the confidence in the U.S. goes down, the dollar tanks, the countries will not be buying our debt or our bonds, gold will soar. Essentially, the markets tank. It's definitely not a good situation if that happens.
Yeah, and it's always interesting to see how they kind of bicker back and forth, almost intentionally to see which side will give in first before they finally come to some sort of compromise. Now, when it comes to those investors, when we're talking about markets, we've really seen that investors have put their confidence in the Federal Reserve, keeping interest rates low and not making any sudden moves. But even Jay Powell is saying that the Fed can't protect the markets if the debt limit isn't raised, like you mentioned. Now, what kind of a fallout could there be for the markets that have been riding on record highs over the last year?
Well, one of the things we just mentioned was that interest rates would rise, housing would go down, plus a lot of the money that people get from federal funding, like Social Security, Medicare, military salaries, all that goes away, tax refunds. So essentially what you're talking about is a situation exactly what Powell says. I love that he actually said that yesterday because I haven't heard him say that before. It's the big but. We can't help you. So this really goes back to let's hope cooler heads prevail in terms of coming to some kind of compromise.
Now, speaking of what the Fed can do, we heard from Powell addressing plans for the Fed to start tapering bond purchases whenever he spoke on Wednesday. And there wasn't a sell-off in the way we have seen in the months past. So have investors just come to grips with the fact that this easy money policy really can't stay in place forever?
I actually think it was more that what the markets did today was show that the Fed is really saying they're still going to keep a very accommodative stance. Don't forget the other thing that Powell said is they're looking at the labor market. So what was the first thing? The market was already rallying into the open, but the first thing that came out was that jobless claims actually rose. Now, of course, we won't know what the unemployment numbers look like until we get through the first week of October. But he was very clear that he wants to start tapering. Inflation certainly has met his parameters in terms of tapering, but he doesn't want to do anything to upset the economy. And of course, now given the debt ceiling situation, as he mentioned, I think they're going to be a little bit patient, and that's what the market heard.
Yeah, certainly a lot of moving parts there, and all eyes to see what the Federal Reserve decides to do, especially in the coming month. Michelle Snyder of the Market Gauge Group, thank you so much for your insight.
Thank you, Rachel.